BPCL Q4FY20 and FY20 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Tiwari from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Aisha. Good morning, everyone. I hope you are keeping healthy and safe. On behalf of Antique Stock Broking, I welcome everyone to BPCL's fourth quarter earnings call. We have the pleasure of having with us today the senior management team from BPCL, represented by Director of Finance, Sri Vijay Gopal N, CGM Treasury, Ms. Teresa Naidu, GM Finance, Sri V.R.K. Gupta, CFM Pricing, Ms. Jenny C.L., Senior Manager Pricing, Mr. Ganeshan Jaibal, and Manager Pricing, Mr. Girwar Bhattar. I would now hand over the call to management for their opening remarks, which shall be followed by question and answer session. Over to you, sir.
Thank you, Nitin. Good morning, one and all. We trust all of you and your families are safe in the current times of difficulty. Before we begin, I would like to mention that some of the statements that we would make during this con call may be forward-looking in nature, and we believe that the expectations contained in such statements are reasonable. However, their nature involves number of risks and uncertainties that may lead to different results. These forward-looking statements represent only the current expectations and beliefs, and we do not provide any assurance that such expectations will prove correct. Our results were published yesterday, and we had circulated the handout containing major highlights thereafter. On the physical front, our refineries throughput for this quarter stood at 8.39 million metric tons, which is higher than the 8.21 million metric tons we processed in the corresponding quarter of the previous year. For the full year, the combined throughput was 31.91 million metric tons as against 31.01 million metric tons for the previous year. Distillate yields were better at 83.88% as compared to 81.64% in the comparable quarter. Full year distillate yields were again higher at 84.53% versus 82.31%. We have closed the Q4FY20 quarter with a negative PAT of rupees 1,361 crores as against a positive PAT of rupees 3,125 crores in the comparable quarter last year. PAT for the full year was rupees 2,683 crores as against rupees 7,132 crores for the previous year. Earnings before interest, tax, depreciation and amortization (EBITDA) amounted to negative rupees 543 crores for the quarter versus positive rupees 5,863 crores for the Q4FY19. Full year EBITDA was rupees 8,640 crores versus 14,948 crores for the previous year. Inventory loss for the quarter amounted to rupees 4,902 crores as against a gain of rupees 356 crores in the same quarter last year. Inventory loss for the full year was rupees 4,718 crores as against a gain of rupees 1,064 crores previous year. Gross under recoveries on sale of SKO PDS were at rupees 22 crores for the quarter as against rupees 120 crores for the corresponding quarter last year. For the full year, under recoveries were at rupees 255 crores as against rupees 883 crores previous year. Net under recoveries after accounting for subsidy have been nil for the quarter as well as for the year. Capex for the quarter has been at rupees 4,780 crores, and for the full year it was rupees 11,064 crores. On the market front, our domestic sales was lower at 10.73 million metric tons as against 11.35 million metric tons in the comparable quarter. The growth was mainly led by petrol 5.13% and LPG 5.84%. Exports during the quarter were at 0.51 million metric tons as against 0.30 million metric tons for the comparable quarter. Our market share among PSUs for the year 2019-20 in MS has been 28.71% versus 28.64% in 2018-19. In HSD, our share is 28.95% amongst PSUs as against 29.02% in the previous year. We are now open for the question and answers round. As this is a post-results conference call, we request you to kindly restrict your questions to the quarterly performance alone, please. Aisha?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rubal Sen from Centrum Broking. Please go ahead.
Good morning. Thank you for the opportunity. I had two questions. One was, sir, you have mentioned the COVID-related write-down of 1,080 crores, and you have also mentioned the inventory loss for the quarter is somewhere around 4,700 crores, 4,900 crores. So I'm sort of trying to reconcile the two numbers. How do we actually look at what inventory is sitting in the EBITDA and what is now, and what is being separately accounted for as a COVID impact in terms of 1,080 crores?
That amount of 4,000 odd crores includes the extraordinary amount of 1,080 crores.
Mm-hmm.
An accounting adjustment because these are exceptional items where we had to write down the inventory to the net realizable value. The total inventory loss is included, including this 1,080 crores.
So can we understand on the similar to what you mentioned in terms of the 4,900 crores for refining and marketing? Of this 1,080 crores, can we have that breakup in terms of what write down you have taken in refined on the refining front and on the marketing front, sir?
I can tell you that our marketing inventory loss was 1,937 crores in the quarter.
Uh-huh.
And the previous period it was a gain of 272 crores rupees.
Okay.
And for the year the marketing inventory loss was 1,833 crores rupees against the gain of the previous year of 134 crores.
Sir, I got that. What I'm trying to ask is that as you mentioned that in the 4,900 crore, the 1,080 crore write-off is included. All I'm asking is that like for 4,900 crore, you have given the breakup. 2,965 crore is refining, and as you mentioned, 1,937 crore is marketing.
Right.
The 1,080 crore, can we have a similar breakup so that we can exclude that from this number for segment wise?
This 1,080 crores has a component of refining side of 400 crores.
Sorry, in 1,080, refining component is 400 crores.
Yes.
Okay.
80 crores is the marketing side.
Got it, sir. Got it. Perfect. And sir, the second question I had, if I may, is the inventory loss that we have booked for this quarter. Can we get a sense of what price we have booked these losses at? I mean, in the sense of what would be the average price at which this inventory loss has been booked? I just want to get a sense of, at what price do you actually start to recover? Because obviously a lot of it is essentially MTM and cash losses have not really come. So what price has this loss been booked at?
My name is Ramakrishna Gupta, GM Corporate Finance.
Hello, sir.
This inventory losses 1081, when we say this is a write down at cost or NRV, whichever is lower. Only in some of the channels wherever inventory is there, those channels we have valued at NRV. Otherwise, majority of the inventory is valued at cost only. The cost is coming around crude of around $39 to $40 around landing.
So cost is 39.40, and the current price was therefore dropped to 25. So that is what would have been booked as loss, is what you're saying, right?
Not for the entire quantity. Only some quantity where it will go for some channels where the NRV is lower.
Okay.
Some channels our NRV is more than the cost. There we have not written down. Some channels the NRV is lesser than the cost. Only to the extent only we have written down.
Got it. So is it fair to assume, sir, now that the Brent prices have revamped back up to 39, a substantial portion can theoretically be recovered in 1Q?
Yeah. Wherever we have written down, substantial portion already it has come back as reinstatement.
Got it, sir. That's what I was trying to get at. Sir, last question, if I may. The Director of Finance was, I think, on TV and he was reported in an interview saying that the capex has been cut to or looked to be cut to 8,000 crores for this year. Can we have a breakup in terms of where you are looking to cut down, if at all, from the 12,000 crore guidance earlier?
Okay, I'm Vijay Gopal. What I was explaining was that we have taken a look at the new small projects. We have a categorization of projects into small projects and major projects. Any project costing up to 150 crores is considered as minor projects. So for the new minor projects, we have been taking a very harsh look and try to make it as few number as possible, which are essential. And in the case of major projects, the cost is coming down not necessarily because we are cutting or deferring, but for the sheer reason that in the months of April, May, and maybe even June, most of the projects are happening in Cochin or in Mumbai, where the situation is not conducive to spend money because work is not possible because a lot of migrant laborers are engaged in this job. In the case of PDPP, for example, licenses are required for the commissioning. Licenses have to come physically. They are all in Europe. So there has been some delays on account of that. We have not deliberately decided to make a major cut, unlike in the case of oil majors. But 12,500 crores coming to 8,000 crores is a conscious decision because we don't want to burden the company at this time with a huge capex affecting the borrowing levels and our debt ratio. It will have no major impact on our future.
Thank you. Dhruval, we would request you to come back in the queue as we have several participants waiting for their turn. The next question is from the line of Aishwarya Agarwal from Nippon India Mutual Fund. Please go ahead.
Thank you very much. Just 2-3 things, sir. Want to understand how is the crude discounts for us for this first quarter? I'm talking about April to June quarter. So how are the crude discounts? $5-6 or something like that? And how do you see the marketing margins going forward, given the crude has already rallied to $40? It is hovering around that. So what is the industry thought process in terms of improving the margins so that at least we can come up with a normalized kind of EBITDA number? And the last is how we should see the capex number for FY20.
So Aishwarya, this crude, we have been getting some discounts, especially in the month of April and May, and that was because of the prevailing conditions where the demand internationally was quite low. So our major suppliers had given the country discounts, and we had benefited. It was in the range of $5 to $7. Some suppliers were even giving up to $8, $9 discount. But that was a temporary phenomena, and now we are back to premium. And in June, the premium is around $2. So that is on the crude side.
Yeah, on the marketing margin side, my request is that you don't take a marketing margin for a week or a month, because what we generally do is that we try to avoid violent fluctuations, and the sharp fall in the prices of products, we knew from the beginning at the end of March itself that this is not going to last, and therefore that is one of the main reasons why we have not been able to pass on the full benefit to the consumers. If you take the marketing margin rupees per liter for MS and HSD, for the year 1920, MS margin per liter was lower than what we collected in the year 1890. And for HSD, the marketing margin per liter is almost at the same levels that we collected in the year 1890. So there has been no sharp changes in the marketing margin on a year-to-year basis. We intend to continue this practice. And today we are facing a problem of very low cracks and prices going up, and therefore the marketing margin is under stress. But it is not our intention to immediately recoup all that loss that we have. We will ensure that on a long-term basis, our marketing margin remains more or less on a standard level. In spite of the fact that we are investing heavily into putting up new retail outlets and infrastructure. As a matter of fact, in the year 1920, we have put up 1,447 new outlets, which is the biggest number among the OMCs.
Yes, that's commendable, sir, in terms of expansion of the marketing network. So what I am understanding that FY19 MSHFD margins, the gross margin for the marketing side, that is the endeavor of the industry to maintain even in FY20.
Yes, you are right. You have captured it correctly.
Sure. And sir, thank you. And coming to crude discount, which is $5 to $7 and then $2 premium. So correct me if I'm wrong. So April, May, we are getting discounts 5 to 7, and the June or maybe the July, we are in a $2 premium. Is that correct?
You can tell it like that because discount and premium is a function of the world demand for crude oil. And actually speaking, it doesn't really matter to us because what matters to us is the landed cost of crude as a first component, because what matters to us is the landed cost FOB plus other things. So first, and secondly, our profits are not based on crude prices. As you know, our profits are essentially on the crack spread which we get out of processing the crude oil. So discount has helped us in the month of April when the prices were abnormally low. That was because the demand in the world was abnormally low and Saudis had no option but to offer an Asian discount. So we benefited, but that we knew that it was not going to last. They also knew it was not going to last. But discount of $7 on a price when the crude oil was around $30 is very unlikely to sustain. We all knew that. We took advantage of the situation. We have also taken some decisions to increase the crude purchase for the month to ensure that we get benefited out of that low price ratio.
Sure, sir. So just one last question. I understood that even in the month of June, we are availing discount of some $5 plus, and probably in the month of July, that $5 is reducing to $2. So basically discounts are there, $5 in June and maybe $2 in July. But what you're saying is a $2 premium. There is no discount as such. Correct me, please.
What I'm saying are two statements. One is that discount premiums are not decided by BPCL or not even by India. It is decided by the suppliers based on the demand-supply situation. For us, what matters is the landed cost of crude. That is the first statement. Second statement is that the crude prices are not the determinant of our profitability. It is the difference between crude and product prices. So therefore, to say that discount was there in April and premium is there in May, if the crack spread in April was lower and the crack spread in the month of July is better, my profit in July will be better compared to the discount month of the month of April.
Thank you. Ashwarya, we would request you to please come back in the queue as we have several participants waiting for their turn. Also, we would request the participants to please limit your questions to 2 per participant. The next question is from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Yeah, thank you very much, sir. Sir, just 3 quick questions. The first is that there is an inventory loss which is 4,900 crores as of March. That is basically lower of cost or market price. But given that this inventory would have been sold in April and April prices were still very low, is it fair to assume that this would have translated into a cash loss in the first quarter?
The inventory losses are not all cash losses. To the extent we sell the product at a price lower than the price which is recognized in the 31st March statement, this is actual cash loss.
Mm-hmm.
And if it is available for sale subsequent and the prices have improved, that is only notional loss. So to what extent it has been notional loss, to what extent it is cash loss, we do not know because we had abnormally high level of inventory in the month of March. Because the demand has come down drastically, we had a commitment to buy certain crude, and we have bought those crude, and we have actually sorted some crude, and we processed, and we had record levels of marketing inventory at various locations of ours. So the fall in prices and the abnormally high quantity of products and crude is the reason why we find such a huge inventory loss. I am not saying that all inventory loss that is recorded is recovered in subsequent months. It is not possible because we are continuously selling. We are not closed on operations even in the worst situation of COVID in the country. We have been operating to the extent of the demand which was there in the country. We ran all the refineries. We have not taken a shutdown at all. We have run all our outlets and we have sold what the market needs. So to the extent that products have been sold in those periods, we have actually suffered cash loss if the price was lower than what is recorded as a closing stock price.
Understood. And so my second question is, sir, on the NRL stake sale, what is the update? Because I think BPCL also was starting the process on its own side.
Actually, NRL is a different transaction linked to the BPCL disinvestment. The process is on, and we will come to know later details. As of now, it is a decision taken by the Cabinet Committee on Economic Affairs to sell to the PSU oil companies in the country. The process is on, but as we are extending the dates of the expressions of interest submission and also receipt to end of June and end of July, NRL will happen simultaneously. That is what we expect, because we want to ensure that as far as possible, the NRL HIVO and BPCL disinvestment should happen concurrently. It is not going to delay, but since I do not know to put a time date or timeline to the disinvestment rate of BPCL, I do not know how to answer your question as to when NRL is going to happen. Only thing I can tell you is that it is our desire that both the transactions should happen concurrently.
Thank you. Then I think we would request you to please come back in the queue for any follow-up. We have several participants waiting for their turn. We would request the participants to please limit your questions to 2 per participant. The next question is from the line of Amit Shah from BNP Paribas. Please go ahead.
Hi, just a couple of questions from me. First one on the refining side. When do you expect utilizations to come back to normalcy? And as of today, we understand it's at around 70%. Is it fair to say that from where you stand today, probably Q2 looks like you should be back at full utilization? That's question one. Second is on the marketing margin that you highlighted that, for MS it was lower as compared to FY19, and HSD it was constant as like FY20. What was that marketing margin number, if you can share? That's it. Thank you.
First question on refining. As of date when we speak, we are running our group refineries at 83% of the design capacity. It is improving actually very steadily. Now, to answer your question whether July will be able to run at 100% depends on the lockdown, how the country is going to open up, and how the pandemic is going to be contained. We have capacity to produce products depending on the demand for the products in the country. We do not know, and we are ready. As of today, we are expecting, we are experiencing that the demand is going up steadily as the lockdown is getting lifted. As of today, we are producing at 83% of the design capacity, which is the best among the oil companies. And second, to answer your question, I would not like to give a specific number. I can only tell you that our MS and HSD margins are hovering around 2 rupees per litre on an average to take all the years.
Okay, this is net margin, right?
Gross margin. This is a gross margin.
Gross. Okay. Thank you so much.
Yeah, thanks.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, hi. Good morning to all. First question is on the debt increase sequentially. Substantial increase in debt in the fourth quarter. I can understand significant capex and dividend also paid out in this quarter, but that could explain only half of it. What was that almost, let's say, 17,000 crore debt increase in this quarter? Can you just take us how much it was temporary, how much can revert in quarter one, etc.?
Yeah, one reason for this number of 47,000 crores is that 6,000 crores is included there on account of the Ind AS adjustment on lease, so which is not a real borrowing but an accounting adjustment. Net of that, it is only about 41,000 crores. We have taken a borrowing of 5,900 crores on 31st March. So if you take actually it is better to compare the average borrowings of the quarter vis-a-vis the previous quarter of the sequential or the previous corresponding quarter. Our average borrowing has been for this quarter, 31st March 20 ended, was about 32,000 crores. Again, 26,000 crores on average in the sequential as well as the Q4 of the previous year. It is a rise, but it is not alarmingly high. And as the situation improves in the first quarter, we are expecting that second quarter at least we will be back to normal. Even at this level, our D ratios are very, very healthy.
No, sir, just trying to understand what led to this spike. You're right, average borrowing will be right metric, but even at the end of the quarter, what led to such a spike in it? Was it all to fund the working capital spike? Or
Yes. This 5,900 crores was taken basically because there was a huge demand drop of products. And most of the outlets, the issue was that customers were not able to hand in cash, and some of the dealers were unable to accept cash. And there was a difficulty in having to extend certain additional number of days credits to the retail dealers. So there were a number of issues connected with the pandemic situation. We had to rise to the occasion to ensure that the products are available to the customer, and we wanted to ensure that customers are not inconvenienced. So there were a number of issues. It was all temporary. I can assure you that it was all temporary, and a spike of even a 5,000 crores increase in the debt, it is not 17,000 crores as you see from the numbers. It's not a very, very significant number for a company of our size.
Sure. And my second question is on you mentioned crude inventory built up when the discounts were large in April and May. Can you just roughly help us how many weeks you can sustain on that crude inventory? So why I'm asking this question is the premiums have gone up from discount is converted to premium, but because we have built up inventory, so we could be making higher margins for few more months.
See, when the prices were some of the lowest levels, discount was highest. When the prices are going up, the premium is coming up. So therefore, the crack spread for those months. Now we had actually, as I was mentioning, we had actually taken higher volume of the crude inventory, taking advantage of the low price situation in the month of March and April. In fact, about 1 million tons generally is our crude inventory. We have taken 1.5 million tons. It is not possible for us to stockpile crude oil in anticipation of taking a view on the crude prices, because we are not a trading company. We are taking advantage of the situation. We have also helped the government to take and increase the number into the strategic reserve, taking advantage of the low prices. It is not our business to take a view on the crude oil and stockpile crude oil in anticipation of its prices going up. But I can tell you that we have taken advantage of the prices to the extent possible within our constraints of storage, because if you see that floating was also not very economical because the rates have gone up very high. Freight rates were astronomically high. And we have also an intention to ensure that our liquidity is not affected by stockpiling crude. There's a huge risk if the prices come down again. So we have been very conservative, but we have been very lucky in the sense that we have been able to take advantage of the lower prices. I will not be able to tell you exactly how much it is going to benefit us. It has benefited us. That much I can take qualitatively.
Thank you, sir.
Thank you. The next question is from the line of Mayank Maheshwari from Morgan Stanley. Please go ahead.
Yes. Thank you for the call, sir. My first question was related to how are you kind of managing the shift in demand mix, because obviously, as you mentioned, there was an increase in LPG demand and aviation fuel demand had come down. So from a refinery perspective, can you just give us some color on how you're managing this?
We did several things. We have imported more than the required normal levels because it has been very helpful from the Middle Eastern countries with which we have best of relationship. Imports were higher, and also the private refineries were also helpful in giving us more LPG than required because their own petchem numbers, production was not good because of the demand slackening. Our refineries itself has also done various things, including change of the crude mix and certain other adjustments in the process to increase the LPG numbers. It's a combination of several factors to ensure that the product demand of LPG was met, and we have also ensured that the PMUY the initiative taken by the government was also fulfilled and ensured that the first cylinder reached each customer as far as possible in the first month itself.
So on the jet fuel side, anything that you have done?
The aviation, we have a flexibility to reduce the aviation by converting that to other products, especially diesel.
Okay. And so the second question was related to the BS6 implementation, of how much are you able to pass on some of these higher costs of BS6 to the consumers yet?
On the BS6 implementation, we have actually been able to provide the consumers the BS6 quality from the middle of February itself, as against our declaration that it will be available from the 1st of April. We have invested a substantial amount in the capex, and the opex on providing BS6 fuel is also higher. A small portion of this has already built in the prices of the consumers. In spite of that, as I was mentioning, the MS prices marketing margin has actually been lower compared to 18-19, and also diesel prices have also been, marketing margins have been made at the same level. It is not our intention to pass on the full impact of the total expenditure to the consumers, because we want to ensure that the burden is as smooth as possible. At the same time, to ensure that we are able to get a recoup of a portion of the capex and the opex in this process.
Okay. Thank you, sir.
Thank you. The next question is from the line of Mayur Patel from IIFL Asset Management. Please go ahead.
Hi, sir. Thanks for taking my question. Sir, if we just consider the current spreads on products and the current discount which you're getting on the crude, what kind of current GRMs on a recurring basis are we seeing currently?
Actually, it is not, as I was explaining again and again, it is not a discount that matters. The crack spread matters to us more. The difference between the product prices that we get and the landed cost of crude oil.
Yes.
Today, if you take neither MS nor HSD is very profitable. As a matter of fact, the crack spreads for MS are negative, and diesel is also very small. It may also turn into negative territory. So today the margin, refining side, if you take refining as a business today, is not very profitable. So
yeah, but any range or any indication can you give? Say today, if we are processing a certain number of barrels, what kind of GRMs are we seeing currently?
Under one of FY21, the gasoline tax is minus $0.37, and gas oil crack is about $8. Whereas gas oil tax used to be about $16, generally about $14 to $16 range, it is only half. And gasoline tax, which used to be about $10, is now about minus $1 around that. So it is very indicative that the refining is not a profitable thing, but we don't expect this to sustain, because this level of tax spread is not sustainable, is our belief.
But what you reported, some very extreme $7.4 core GRM, when the spreads were similar only.
That is Q4. I'm talking about Q1.
No, which is what I'm saying. In Q4 also, the spreads were pretty low, but still we reported $7.4 GRM. Maybe some bit of benefit from all these discounts would have come.
There are discounts, there are other adjustments, as I was mentioning, the marketing margins are not evenly spread throughout. So there are a lot of issues. I would not like to comment on the specifics. You are right that I can only tell you that directionally refining margin on a day-to-day basis today is not profitable. In India, we are ensuring that Indian refineries and marketing companies together having a flexibility to improve the marketing margin when the refining side is poor, and reduce the marketing margin when the refining gives benefits, because that is why we are integrated oil companies. You cannot just take the crack spread as the basis of our GRM, because RTPs are also a function not only of the crude prices, but also the results of inventories and other items.
Sure. So just another question on the debt, which you explained. So I didn't get it properly. Can you just explain that this 6,000 crore is a accounting adjustment? So 41,000 crore from 26,000 crore is the increase. How much of this is temporary because of the factor you mentioned that you have to support dealers, and which is like because of the pandemic?
Actually, what I mentioned was on 31st March, one day, we have taken a loan of about 5,900 crores. And on a point-to-point basis is not the right way to compare the borrowing levels. Borrowing levels are to be compared on the average borrowing. average borrowing could be in the fourth quarter 32,000 crores and not the 41,000 crores. So 32,000 versus 26,000 is a hike, but not a very high increase. Considering the situation of lower demand and lower sales and lower production.
So which is largely temporary in nature and this should reverse going forward. Is it fair to?
Yes.
Okay. Fair enough. I'll come back for more questions. Thank you very much.
Thank you. The next question is from the line of VP Kumar from Spark Capital. Please go ahead.
So thanks for your time. So in the opening remarks you mentioned that or rather to one of the questions that not all inventories have been taken at NRV at cost. So if you could just repeat that, why would that be that some inventories at NRV and some are at cost?
Some of the inventories we have categorized into different channels. For example, if we have a channel selling those inventories to other OMCs, I can realize only at RTP. If I am selling those inventories in the market, I will get at market prices. So accordingly, entire inventories we bifurcate into the channels. Only wherever my realization is less than the cost, mainly in terms of my OMC, aviation and other products, where my NRV is actually less than my cost, that is the reason we revalue at realizable value. But otherwise, where we are selling the inventory to the market, most of the volume is my NRV is almost either it is closer to the cost or it is more than the cost.
So at least on the refining side, all the inventories have been marked down to the closing price as of March 20.
Not all the inventory, only some portion. That is the impact of around 400 crore refineries right down.
Okay, got it, sir. Sir, and have you written down any investments on our E&P portfolio internationally?
E&P portfolio?
E&P portfolio is a BPRL.
BPRL.
We have made an impairment provision of about 590 crores rupees in BPRL, and we have absorbed 302 crores loss of BPRL consolidation.
Sorry, your voice is not audible, sir. If you could just speak up a little.
Yeah, around 590 crore there was an impairment in one of the group company, BPRL, and with that we have ended up in the BPRL at group level around 305 crore profit negative losses.
Okay, got it. Thank you.
Thank you. The next question is from the line of Amit Rustagi from UBS Securities. Please go ahead.
Sir, good afternoon. Sir, could you help us to understand that how much marketing inventory we had on 31st March and how much marketing inventory we have now and maybe now or in the last 1 month?
Sure. Think for the quantity.
Yeah, the quantity, yeah, the volume.
Generally, marketing 2.8, 70. March 20. Any percent that's what number. But as of date, we don't know.
Amit, we will give this number offline.
As of
Yeah, okay, thank you. And sir, could you give us the number on outstanding from the government as on 31st March? And yeah, 31st March. And the second thing is that have we started receiving money from the government in last 2 months? And when we will start receiving for the free cylinders which we are giving to the poor?
Actually, we started with a receivable in the year of 8,800 crore rupees.
Mm-hmm.
As of 31st March, it came down to about 4,800 crores. So there is a reduction in the government receivable in the year 1920. As of adding April claims, we would be, as of end of April, it is 5,400 crores. See, the subsidy levels have come down because especially on the SKO, there is not much subsidy now, and SKO numbers, the production also has come down. The subsidy is now happening on the LPG mainly, and as the LPG prices were soft, the subsidy amount per cylinder also is less, and therefore the subsidy quantum itself is less. Mm-hmm. To answer your other question about PMUY free cylinder release, we have already been given a portion of the difference between the What was even received by us from the government? 58 crores have already been received. What does that represent? That is the percentage. How much we have given? No. That is actually a component of one portion. One portion of the subsidy has already been released to the government for the free cylinder, and the balance portion will come as part of the normal subsidy mechanism. It's not a major hit on us. It's a 3 months, one cylinder each. It will be about 4,500 crores max at the highest levels of LPG. I think LPG is coming down. It will be about 3,800 crores max for 3 months.
3,800 crores for your company.
Yeah.
Or for the sector.
For my company, I'm saying first month April was the highest peak number. It came down very drastically in the month of May. So it could be 3,500 crores.
Okay. Yeah. Okay. Thank you.
Thank you. The next question is from the line of Bhavin Gandhi from BNK Securities. Please go ahead.
Yeah. Thank you, sir. Sir, firstly, if you can share the JV, the subsidiary numbers, NRL and PINA, the throughput, GRMs and the PAT.
Yeah. So for BORL, the GRM for the quarter end is $2.5 per barrel, and if you consider for the entire year, it is around $5.6 per barrel. The throughput for the quarter end is 2123 TMT, and for 1920 it is 8000 TMT, around 8000 TMT. Coming to NRL, for the quarter end, if we don't consider the excise duty benefit, it is $2.9 per barrel, and for the year end it comes to around $8 per barrel. If we consider the excise benefit for the quarter end, the GRM comes to $17 per barrel, and for the year end it comes to around $24.5 per barrel.
And so the PAT numbers for both?
Yeah. So PAT for BORL is negative 800 crores for 1920, and for the quarter end it is profit of 840 crores. Coming to NRL, the PAT for the year end is 1530 crores.
And sir, can you share the update on the key projects like the petrochemical and other projects which are ongoing, and the capex for FY21? That's it from my side.
So major projects ongoing are the PDPP and the MSBP. So the MSBP is almost complete, and the first part of BS6 fuels, BS6MS, is already complete. The second part of conversion of naphtha into MS is ongoing, and it will be complete shortly. And PDPP was mechanically completed, and commissioning is ongoing. And the commissioning will involve some licensors visiting the plant and doing so. Because of COVID-19 situation, there are some slight delays in that because of the travel restrictions. And the plan for 2021, we were in the last call we had told that we will be doing around 12,500 crores. Now we will be having a relook, and certain smaller projects we will be reconsidering, and this year we estimate to do around 8,000 to 8,500 crores for 2021.
Great, sir. Thank you so much.
Thank you. The next question is from the line of Saurabh Handa from Citigroup. Please go ahead.
Yeah, thank you for the opportunity. So most of my questions have been answered. Just back to the refining margins, could you just give some color of if we add back the inventory losses, it's looking like a number of almost $7.5. So could you give some sense of how this was the case? Because most of the OSP discounts would have come only at the end of the quarter or in this quarter.
So Saurabh, over and above the discount, there was certain impact of the distillate yield. As I told in my beginning address that the distillate yields were better for the quarter. So the refineries had done well. And as far as the inventory loss figure is that you would appreciate that it is an estimated figure. It's not, there is no specific method of calculating the inventory loss number. So it may not be, the perfect thing to just add back the inventory loss and arrive at the core GRM. It is only an indicative number.
Okay. So would that have been any benefit of, since your PDPP project is undergoing commissioning, any shift in yields in the refinery or to property? No, not really, in the Kochi refinery.
Now, on commissioning of PDPP, what happens is that we will be able to reduce the LPG make, because otherwise it has to be converted to propylene and then added as the feedstock for this product. So today we are making, instead of propylene, we are making LPG, which is not giving that kind of margin, because LPG is a very low margin product. So the profitability will improve, but we are actually awaiting the release of the licenses experts for commissioning assistance, and they are held up in Europe, and even India has not permitted travel from abroad, and unless the travel restrictions are eased and they are comfortable to come to India, it will be difficult. So we had a plan to commission this by June. It is getting slightly delayed due to the COVID.
Okay, so any new timelines on that, on when the commissioning?
Depends on when they are actually allowed to come in and when they are comfortable coming into the country, because that entirely depends on, I don't know who can decide that, because if the COVID situation worsens in the country, in India, and if they are comfortable sitting in Europe, they may not like to come, right? So first of all, we have to decide when we are going to remove the travel restrictions of foreigners into the country. That is not in our hands. Secondly, that depends on the pandemic situation, how it is going to play out in this country vis-a-vis the situation in Europe. If our situation turns worse, we will work, but they may not be comfortable coming to the country. So I do not know how to put a timeline to that. As soon as it is permissible and possible, we will commission this.
Okay, great. So thank you so much.
Thank you. The next question is from the line of Vidya Dhash from ICICI Prudential. Please go ahead.
Yeah, thank you. So my question is, one, if you could clarify on Numaligarh, what this 15.3 billion is your full year profit number? What is the?
Yeah, 1533 is for the full year number.
1,533 crores.
Right.
Okay. The next question is, could you give us some color on the crude which you use by country in FY20? Rough idea. How much of it comes from Saudi Arabia, Iraq?
Yeah, so around 26% comes from Saudi Arabia, and from Iraq we import around 17% of the crude requirement. Another major country which contributes to our total is Abu Dhabi, around 14-15%.
Okay, so Saudi Arabia you said is 26, Iraq is 17, and Abu Dhabi is?
Around 14%. These are all approximate numbers.
And the trend will be roughly similar.
Yeah.
Yes.
Even going forward.
Yes.
Okay, and okay. So on the abnormal level of inventory that you said you will give offline, or able to give now? So there's an earlier question on this too. Okay. And that's it from my side. Thanks.
Thank you. The next question is from the line of Nastya Gupta from Bank of America. Please go ahead.
Good morning, sir. My question is on the MAT credit. How could you quantify the amount of MAT credit that we have that is not taken the lower tax rate in this quarter also?
The MAT credit outstanding is about 720 crores rupees, and once this is taken, we will convert to the new tax rate.
Okay, and sir, secondly, my question is on this SPR reserves. How much money are we looking to receive from the government, and how much have we contributed to the SPR?
So around we have contributed around 0.5 MMTP for strategic reserve.
That already.
Yes.
All the money has come in. It is not that we have contributed anything. We have actually a commitment to take crude oil. That crude oil has been actually transferred to the government of India. The full consideration for that has already been remitted by the government to us.
So, and so my last question is on NRL expansion. Is BPCL participating in any way in the expansion of the refinery now, or are we not participating in looking for the sale first?
No, NRL expansion is on as far as we know, and whether we will be participating in it is a question whether when we are going to get divesting NRL. So it's very unlikely that the BPCL will be actually part of NRL expansion because it's a long-term project. It will take at least four years to complete, and the government's intention is to actually divest BPCL, and therefore as part of that, the divestment of NRL from BPCL will also happen. So it will be very unlikely that BPCL will be part of that NRL expansion at this stage.
Sure, sir. And lastly, sir, on the marketing margin side, since the government has hiked the excise and now food price also rising, so the marketing margins are kind of contracting. Can we take further contraction in the margins, or do we see it as further hike in retail prices now going ahead?
So on a sustainable basis, oil companies are not going to bear losses. It is a policy that marketing margins on a long-term basis are on a standard level. So I would not be able to comment on when we are going to and if we are going to revise the prices, because one day's spurt is not going to be the basis of increasing the prices, because today I'm finding a reduction in the prices of Brent crude. So we'll watch the situation as it develops, and we will not be able to publish when we are going to revise the prices.
And sir, any premium on BS6 related, like any BS6 related premium on retail prices?
I've already answered this, but we have been able to actually pass on a small portion of the spend on the BS6 in the consumer prices, both on the RTP side as well as on some portion of the marketing side.
So is it possible to quantify that amount?
No, that is a classified information.
Got it, sir. Thank you.
Thank you. The next question is from the line of Vajrajan Shivshankaran from Systematics. Please go ahead.
Thanks, sir. My questions have been answered.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Rishabh Sher Dalal from Praveen Ratilal Share and Stock Broking. Please go ahead.
Yeah, thanks for the opportunity. I just had one question regarding the Numaligarh refinery. If you could share some insight on the valuation of the Numaligarh refinery, how would it look like? And, as shareholders, would we get a right to vote through the postal ballot?
The NRL divestment process will follow the DIPAM adopted processes. DIPAM has already appointed a valuer for BPCL, and the same valuer will be doing the valuation of NRL. We have to wait till the valuation process is over, and then a reserve price will be determined and the stake will be offered. So I will not be able to tell you at this stage as to what will be the valuation like. The process is on. And secondly, this divestment being a material subsidiary, there will be shareholders' consent will be taken at the appropriate time, and all the shareholders will be permitted and entitled to vote through postal ballot also.
Okay. So this valuation, in what time period will it be completed?
The process is on. As I was telling, the BPCL divestment itself, the timelines have been extended in view of the COVID situation. So we are, what our intention is to actually, as far as possible, that the privatization of BPCL and the divestment of investments which we hold in NRL happen concurrently. Otherwise, there are various technical and commercial difficulties. So we will. It is easier to do the NRL divestment as compared to a BPCL divestment. So it is not a question of how I can do it very fast. But then I don't want that to happen, and neither NRL wants to happen, nor the government of India wants that to happen. So we are trying to make it as concurrently as possible. So we have to wait for how the pace of divestment of BPCL takes place for us to decide a timeline for NRL.
But can we just expect, that the process by August or September will it be completed?
August or September is unlikely because EOI date has been extended to 31st July.
31st July.
So it will be very unlikely that it will be possible in the month of August or September. The best estimate, if you want a number, it has to be actually a question to be answered by DPAM. It can happen earliest in the month of maybe December.
Thank you. Krishna, we would request you to please come back in the queue. We have several participants waiting for their turn. The next question is from the line of Rohit Ahuja from BOB Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So just a couple of questions from my side. First one being, as of now, how's the situation in terms of your overall margins, and do we see inventory losses that you have reported to be recovered in this quarter? And secondly, how do we see the situation in terms of consumption of petroleum products on your marketing side, and when do we see volumes normalizing to the pre-COVID situation level, which is like February?
Answer that because we have actually seen the sharp recovery of demand in the country. April was pretty bad.
Yeah.
May was substantial improvement. As we speak today, it has come back to almost 70% of normal demand. It was almost 30-35% in April, about 50-55% in May, and it is now hovering around 70. And depending on the progress of the lifting of the lockdown, it can happen as soon as in the month of July back to almost 90-95%.
So when you break down the products, would it be diesel coming back to normal earlier level? And I would assume 88 is still far behind because flights are not operating.
That's right.
Much. Yeah.
That's right.
And petrol would also be still a long way to catch up?
Actually, our experience is that MS has picked up faster than diesel because diesel, a part of it is used in state transport, buses and all, and that has not resumed in full scope.
Right.
So MS has actually faster picked up. Diesel
Okay.
follows. Aviation, of course, depends on the flights and such things because aviation is not a major component to speak of for us, either in terms of volume or in terms of profitability.
And what about the other industrial products like bitumen and?
No, bitumen and all are not very.
Not
because
much.
we are talking mainly of major products which are in terms of, as you know, the MS, HSD will be 45% or so. MS will be some 20%. Aviation could be some 5%. And LPG could be about 8-10%. So LPG is actually doing well because
Right.
PMUY has also helped us move a lot of it. In fact, we had to, as I was mentioning earlier, we had to import more LPG and take some more from the private players. But demand side, we are not expecting. In fact, when in the month of March, we expected more time to take for the country to come back to normalcy. But in spite of the lockdown and its gradual calibrated lifting,
Yeah.
we find the demand going up faster than before.
Right. So, sir, do we see your marketing margins now? A lot of questions have been asked, but we just want an indicator. When are you resuming the daily price revisions on petrol diesel?
No, because we are not in normal times yet. So unless the normalcy is restored, we cannot have a normal arrangement of passing on the price. It is not only in India; it's a global phenomenon. It is not our intention to have very highly fluctuating consumer prices in the country. It is not desirable, and therefore our idea today, for example, the marketing margins are actually not very good. The refining crack spreads are extremely poor, and in spite of that, we are not revised the prices up. So we'll wait. We are very sure that normalcy will happen sooner than we feel, and we pray that it should happen very soon.
Thank you. I now hand the conference over to the management for closing comments.
We thank all investors and analysts for participating in the call and showing interest. And we thank Antique Stock Broking for having arranged the call. Thanks, Nitin.
Thank you for.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.